Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of the week's biggest stories in the mining industry. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and of course, leave us a comment below. Let's get into it.
The gold price moved down this week, taking a turn toward the end of the period that took it below $45.50 per ounce. Its sister metal silver followed a similar trend, although at one point it briefly approached the $89 per ounce mark. Precious metals continue to react to the Iran war, which is developing quickly. Iran rejected the latest peace proposal from the US last weekend, with President Donald Trump calling the country's counterproposal totally unacceptable. Tensions between the two nations have since escalated further, and a vote in the House of Representatives shows that opposition to the conflict is growing in the US. A resolution calling for the end of American involvement failed, but was the closest vote yet on the war. The global geopolitical situation was also complicated this week by meetings between Trump and Chinese President Xi Jinping. They reportedly discussed topics such as Taiwan and Ukraine, in addition to Iran and US-China relations. Also in the mix was the latest US consumer and producer price index data. April CPI was up 3.8% year-on-year, the fastest increase seen since 2023, and 0.6% from the previous month. Meanwhile, core CPI, which excludes the food and energy categories, rose 2.8% year-on-year and 0.4% compared to March. PPI for April was up 6% year-on-year, the largest rise since December 2022, and a seasonally adjusted 1.4% month-on-month. These numbers have stoked concerns about higher prices and have raised questions about the U.S. Federal Reserve's path forward, especially with the road now clear for Kevin Warsh to take the helm at the central bank, succeeding Jerome Powell. M&A was in the air in the gold space this week, with Equinox Gold announcing plans to acquire Orla Mining in an all-stock deal valued at $5.1 billion. The combined company will have an implied market cap of $18.5 billion and will become the second largest producer of Canadian gold. In total, its annual output is expected to come in at 1.1 million ounces of the yellow metal. Russ Beatty, chair of Equinox, has spoken frequently about the importance of scale, and this past January I asked him if he was happy with the size of the company. At the time, its focus was on absorbing assets gained from its purchase of Calibre Mining. Here's how he explained his vision for Equinox.
At the end of the day, though, scale matters. I have maintained that mantra for 8 years now of the company's existence. It does matter. You definitely have higher valuations, higher multiples as you get bigger. And at the end of the day, I'm really trying to build a senior producer, not an intermediate producer. So we're on the way there. We might have got there with Brazil, but actually we have an easier chance, I'd say, of getting there long term with the assets we have right now.
The transaction with Orla is expected to close in the third quarter of this year. It's worth noting that Beatty is stepping down from his position as chair of Equinox, although he'll become a special advisor to the company moving forward. The Equinox Orla deal wasn't the only M&A activity in the mining sector this week. Elemental Royalty and Vizsla Royalties have entered into a definitive agreement through which Elemental will acquire Vizsla in a $327 million arrangement. Vizsla's key asset is a 2 to 3.5% net smelter return royalty on Vizsla Silver's Mexico-based Panuco Silver Gold project. Elemental CEO David M. Cole said in a press release that it's expected to become a cornerstone of the company's portfolio. Panuco has been in focus this year since a January incident in which 10 people were abducted from the project site. As of Vizsla Silver's latest update at the beginning of April, 9 had been confirmed deceased, with the 10th still missing. I heard from Jordan of Mining Stock Monkey, who said that while those circumstances create some risk for Elemental, overall he thinks the tie-up makes sense.
I think Elemental got a good price, and that's going to make a huge difference in their growth profile, assuming the project advances, and that's certainly a risk that Elemental is taking. There's a risk that things don't get better there, or there's a risk that things get worse, and maybe it takes longer than a couple of years for them to start building the mine. In which case, maybe it's not a great investment for Elemental, but overall, I like that purchase for Elemental, and it's going to boost their production a lot should that mine end up getting into production.
Elemental and Vizsla expect the transaction to close in Q3. For more on those companies and other topics, I definitely recommend checking out the full interview with Jordan. You'll be able to find the link in the video description.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.